Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Paul Mathieson, as CEO at Amazing AI. How are you today, Paul?
Thank you. Having a good day. Thanks for inviting me, Zach.
Right, we're speaking, I suppose, after a post-summer period of lots of companies on the London market adopting a Bitcoin Treasury strategy. There was a surge in share prices in May, June, and maybe into July, but then a lot of them are down 80% of the peak. It's been a bit of a roller coaster. People said it was a bubble, people said it was this and that. But the essence of the Bitcoin Treasury strategy has been, for most companies, that they would raise money through equity. One or two have done it through debt in order to buy Bitcoin and hold it on their balance sheet and use it for either hoping that Bitcoin will go up or as a store of value whenever they're going to do whatever they're going to do. The reaction to companies announcing a Bitcoin treasury strategy has gradually diminished as people worked out sort of the lay of the land and everything else. You come to the party or after the party and said that you've got a Bitcoin strategy. Maybe you can tell us what it is.
Yeah, excellent. So, I think the old Bitcoin Treasury or crypto Treasury 1.0 is sort of dead, as you described. It's a pretty simple model of raising money by a crypto asset that people could do, all day long. I'm applying my, extensive investment banking, derivatives, trading, and other experience to, I don't think it's just crypto treasury 2.0. I think it's actually 3.0. We are going beyond the basic to diversify, first of all, into multiple crypto assets, but more importantly, managing the exposure, not just sitting there, buy some crypto, sit on it. We are utilizing experience to make that return much, much greater, and also protect on the downside, and also looking at potential acquisitions of the failed crypto 1.0.
Right. So, if I understand it correctly, and I used to be a derivatives broker many years ago, you will be using derivatives in order to get exposure, leveraged exposure to cryptos, and obviously using those futures and options will also be hedging yourself on the downside if there is a downside. And I suppose you can also use options to get in at a lower level. Let's say Bitcoin suddenly probes down to $50,000. You could be in there at that price.
Yes, correct. So my background from 25 years ago, previous to investment banking, I ran my own funds management business. So I'm an expert in long dated call options and put options over Australian blue chip stocks. So I'm applying similar strategies to our crypto treasury. And in essence, potentially we could be looking at 100 times the exposure, but also limiting the downside via put option protection. So you don't need to be a Bitcoin fanatic to do well out of our strategy. I back tested my strategy many years ago, over 20 years. It never lost money. It averaged 500% and made much more on the upside. I actually implemented that, and that strategy forms the core of our long-term shareholders in our company today. So it's a very different way of thinking. I think the old school dinosaur crypto companies are going to have to adapt, and we see opportunities to actually buy them and potentially convert their strategy into something that is much better.
So would this be a bit like the covered call strategy that you would, or part of it, would it be a covered call strategy where you own a stock and then you sell a call and you're getting in the income from that from selling that premium?
No, no, that's more of an active management approach. My approach previously was around more of a strangle, where you're basically saying, over an Australian stock, if you think it's going up a lot, So in this case, it was say Bitcoin was going to 1 million, or it's going to collapse to zero, then you are a winner under that scenario. So you only lose if it stays flat. And the odds of that, people could make their own decisions. But if, Bitcoin sat where it is, or the other crypto assets sat where they are, then you would lose. But if any of them collapse or do quite well, then our strategy works extremely well over 5 years. So a traditional Bitcoin treasury, if you put 1 million into that, you're getting 1 million of exposure. Under our, potential strategies, then, it could be 100x in the upside or the downside, but you're only limiting your downside to what you paid on the premium. We're comfortable in doing that because we have a core solid business that can pay the premiums and do quite well, no matter what the crypto market does.
Right, and so basically, you have a strategy which, as you described, it's one that is potentially very rewarding. Is it something that is also different compared to the existing 1.0 companies in the sense that you're not having to raise money every other week to buy more Bitcoin or buy more Ethereum? You can operate with a relatively small amount of cash.
Well, exactly. So even the small amount of money that we raised recently is enough to potentially gain 50 to 100 million of exposure over crypto assets. And myself, as the major shareholder, has never sold any stock at 38.1%. The CEO driving the whole strategy in experience. I'm not interested in being diluted myself. So we potentially can have very limited raises to achieve massively higher exposures than the traditional model. Also combined with our normal business. So it's very different. I mean, if you saw our even last raise, we did it at a premium to the market price through existing solid shareholders, myself and others. So it sort of shows the difference in the strategy. So potentially with a 10 million raise, we could have, 1 billion exposure to this strategy combined with our underlying business.
And so let's say we're a year down the line, you will have raised more money, you will have taken profits along the way, I presume, from the movements in the cryptos, and then you'll then plow that part of that back into adopting fresh strategies at different prices in different cryptos.
Yes, so we would look to protect our position on the way up. I mean, if Bitcoin was to rise substantially, and we would, protect that position on the way through. We also have our underlying US lending business that we can lend any dollar out at 59.9%. So we have a highly generative revenue business that is different to the other treasury companies that, could not make anywhere near the sort of return. So we have multiple options combined with multiple diversified strategy, which was the core of my funds management business, in that, some investors think Bitcoin can never go down. Well, I believe in the crypto space, but do they look at quantum hacking? Do they look at the attacks on Bitcoin mining and so forth? Whereas we think it's prudent, or much more prudent, to diversify into other cryptos that don't have that exposure. So that if we can, get to a position of my previous funds management position, where we would only need one of 5 cryptos to go well up or well down and make money. So we think that's smarter than just sort of saying that Bitcoin goes to, everything goes to zero versus Bitcoin, which we think is a little bit insane.
Well, we look forward to your strategy being implemented over coming months. In the meantime, Paul Mathieson, CEO at Amazing AI, thank you very much indeed.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.